Okay, so this is the first Q&A session for James and I regarding Systems Academy. And James, do you want to share what is Systems Academy to you?
Sure. Yeah. I mean, I think that's a good place to start. Maybe getting both of our understandings of how Systems Academy operates and the way that we see it, kind of working in the constellation of our approach to trading. For me, I've seen it starting off in a few different ways. Uh, First, it was kind of this logical exercise that I was going through and trying to amass all the information and organize it. And it was a lot. It's just, there's tons and tons of content, and it's all organized very well. It's all logically, progresses from one section to the next. But it can, at least I felt that it could be easily overwhelming because there's so much there. But when I kind of backpedaled and thought of it as really a scientific process, it's one step to the next to the next, and really is how Ali lays it out. The Everything just slowed down, and I was able to
Hmm.
fully engage with each of the stages, and in both the theory components and then in to the practical application, system design, optimization. And I think some other students had very similar experiences. Someone like Logan, who really like threw himself into each of the subsections, and really absorbed each of them. For me, that was the ended up being really the expression of that scientific process, going through trying to prove a hypothesis or really disprove a hypothesis. And then if it was disprovable, throw it out. And there were plenty of ideas that, we started with, and uh, which were not statistically significant. But once you hit that one that is, then you can really interrogate. And that's for me where I found so much initial joy in the process, is finding that first idea that then you can just run with.
So when you say prove a hypothesis, do you have any examples of just, one of
Sure.
the first one you thought of, or just was it relative to price action? Was it relative to
Yeah. So actually, I should have said disprove a hypothesis, because that's
uh-huh.
really, what we're what one would be doing if they were faithfully engaging with the scientific process. And so, attempting to disprove the hypothesis would be so. And I did started with something that we discussed in the actually the pro trader mentoring, the 3 bar fade, that the market makers are usually active, and the market usually starts to pull back every 3 bars.
Mhm.
So I just, went to the chart and just every 3 bars marked them. This is before I had learned to do any coding at all. So I was just drawing lines, clicking lines onto the chart, vertical lines, and looking at that as, a system, just a rough idea for a system. And even with filters, it's like that's not going to work. It does often pull back at 3 bars, but there are such exceptions that you need to have very large accounts to be able to scale in if you get one of those moves that does not pull back after 3 bars, because then you're looking at between 6 and 10 bars of move. So you have substantial drawdowns in those. Just taking that approach. So starting with that, and then for me going into actually the investigation of the initial risk trade, or so the initial stop risk trade, the I1R, and that was where I ended up spending a lot of time initially, and that was very fruitful, and that ended up being the first system that I coded as well.
And would you say, because you mentioned the I1R system, and that's something that Ali has talked a lot about in the Pro Trader mentorship sessions. But would
Mhm.
you say the biggest piece with that is taking that idea and fully, rigorously testing it out by looking at the charts and either coding for it, putting it into Excel? Is that really what
Ye-
you said it made it fruitful? How did it make it fruitful for you?
Yeah, that was exactly it. I mean, it was identifying 30 potential variables that might have statistically significant effects on the performance of the underlying principle. So starting from the first principle that strong leg ones lead to leg twos, and leg twos being the highest probability setup in price action. And
Hmm.
so if we want to trade for leg twos, and so the first principle was that, and identifying statistically significant leg ones that will lead to leg twos, and then qualifying expectations for how those leg twos will perform, uh, identifying a myriad of variables that may or may not be statistically significant in the performance of those, filtering of the leg one and performance of the leg two. And so then going through and basically applying the Pareto principle and trying to find the 20% that account for 80% of the performance.
So you mentioned something. You mentioned the first principle: leg one equals leg two. We're finding second legs. If I'm someone that's studied out for, if I'm trying to be a discretionary trader and I've studied out, I understand what a second leg is. I've seen the video course. How can Systems Academy help me? Can I take just the simple, if the highest probability trade is getting a second leg, can I build a system just on that concept through Systems
Absolutely.
Academy?
Yeah, absolutely. I mean, that's what I did. I mean, that's certainly the starting point. And there are plenty of people who did the same thing, just using different uh, setup conditions for that leg one. The leg one doesn't have to be an I1R, which is a very particular kind of leg one.
Hmm.
It involves starting from a reversal. Um, and so, like a reversal bar. So, uh, some leg ones do not necessarily start from, well, they all start from a reversal bar, but they don't all start from the and continue with the same bar direction, which is what an I1R does. Is it's a consistent bar direction of leg one, like you have no opposing directional bars, and it meets a specific target, measured move target of the signal bar within that leg, and so that's one type of leg one. It's statistically significant in that if bulls or bears get that much of a move, the odds of getting a second leg go up substantially. But you could have micro channels. It could be breakout and follow through. It could be, there's many, many iterations of how a leg one might develop. So
So you feel, I mean, obviously you were certainly confident on the different iterations, as you said, of how a leg one and a leg two can actually play out or develop. Would you say, as far as what, if you were to explain, just for a minute, you started coding. When did you start coding?
the
About 6 months before.
July of the July before we started Systems Academy. So
Okay.
what was it?
Okay. So that was, so we
3 months
started what,
before?
November? We
So
started about end of September, or was it November?
I think it was end of September, October.
Yeah.
Yeah.
End of, so basically October. So
Yeah.
you had not many months to really figure out how to code.
I also wrote terrible code.
But
It
if you
was
look at stuff
yeah.
now, I mean, you're light years ahead of people. Think you've been coding for years at this point.
Yeah, I mean, I also spent a lot of the time in Systems Academy, because I think I started a bit already kind of uh, leaning in the direction of the I1R, because I had been looking at it for a while, and so I
Hmm.
knew at that point that it was really where I wanted to spend most of my effort. So I was able to allocate more time to doing the coding, and I was also translating the some of the breakout code that Ali had written into PineScript, and so just looking at the way that he organized his code actually helped me reorganize the I1R code that I'd written, as well as some other pieces that I was using to do backtesting. And so all of that kind of came together mid fall, and I think since then things have just been much faster for me.
So how would you say? And by the way, that the paint bar James is referring to, Ali gives everybody in Systems Academy,
But
and
yeah,
those that have been in the Pro Trader mentorship, they know what I'm talking about. It's the same. It's basically the same code as the people that went to the Orlando event last year received as well. So James, how would you say from
I
October?
think it's expanded though. I think
Oh, it's certainly
he's added
it's
quite a bit since the
that's a very
Orlando
good
event.
point. It has certainly expanded. So how would you say from your trading from October of 2022 to today, how has Systems Academy for the better or the worse, how has it changed your trading? Is everything
Uh,
just more, do you feel like more focused, or do you feel like it's more,
just more relaxed,
so why is it more
much
relaxed?
because I have, well, uh, I don't know if someone else refers to this, but one of the things that also in pro trader mentoring that Ali discusses is, the continuous examination. So making sure that you're constantly examining the chart. Nothing is
Mhm.
set. It's doing the bar by bar analysis that Al talks about. Um, but also having expectations for how each bar should look after you've executed your trade according to the system that you develop. Um, Having those expectations and knowing, for example, that with the I1R system, after two closes against the position, the odds of reaching the minimum target go down by 30%. Yeah,
Really?
yeah,
So
and then you also have a much higher probability of entering into a wide trading range rather than another trend leg. So there's a lot of uh, rational or expectations that you can apply to the way that you actually manage trades. So for me, more than execution, because that's actually something I got from Al's course, is like tons of ways to execute. There's lots of different strategies that you can use. Just understanding a market, the market cycle. I mean, that's something that's incredibly valuable. But for me, SA2 gave me so many more tools and so much more. I don't want to say leisure, but so much more ease with managing trades. And it's just not there's just no stress, managing positions anymore.
and you said something interesting. You mentioned how the CE, how there's you have to understand, or others call it the bar by bar, the expectation behind whatever trade you're taking or doing. You have to understand all the scenarios that are most likely to play out. And then what do you do in each one of those scenarios? And what's interesting is many people have very little understanding what I1R is or how frequent they are. But the simple fact of you understand that concept so well, your confidence level is, near 100% of what is most likely to happen under those situations. And so that gives you, and it makes sense, that gives you total, relaxed, you're in a relaxed, calm state. You're not trading off emotions, you're just trading off the logic based on your studies of I1R. Is that correct?
Exactly. And actually, Han asked a good question. Build it over,
Which
hundreds of.
question, James?
Sorry, the how do you build your CE? Do you collect examples to form that? And yeah, I mean that's exactly it. Examples, and so hundreds of trades of back testing, hundreds of trades of forward testing, and then live testing.
So,
It
James, just to piggyback off that, you know, how do you recommend people to be back testing in Systems Academy? If I'm a back
uh,
test, is that Excel? Is that
Yeah, I mean, it's a lot of. I think that there's an initial kind of hesitation or reticence to go through a manual backtest for. I think for two main reasons. People see it as having a lot of bias, potential bias, subjectivity. Just picking the trades that worked and then kind of organizing a system around those. Um, and then two, the time that it will take to do it manually. Whereas in theory, you could have some code that you write and then it just spits out a number. Um, and that's true. You can do that. Often the forward, the live performance of a automated backtest does not actually align with the performance in the backtest, for a
mhm.
variety of reasons. But so for me, I did three different market studies. The first one, I tested 8 variables. With the I1R, and then did that for 150 trades. get between 3 and 8 a day. Usually 8 on the upper end. That's not common to have that many. So usually it's between 3 and 5 I1R setups a day. And those can be for continuation or for a reversal, because I1Rs, one of the things that I found is that I1Rs that happen in leg threes are typically climactic. And so
Hmm.
if all you do is run an automated back test, that's not a nuance that you find, because you're not as consequently, one of the things that I ended up doing was going in and writing a leg counter to improve the way that I was identifying those leg threes and filtering those as fade setups rather than continuation setups. And the nice thing about those is if you get a continuation from a leg three, so if the I1R generates in a leg three and you get a pullback and a subsequent breakout, then typically you're getting a breakout in the direction of a wedge and a significant acceleration of the trend. So it's a 25% move, and you can expect three more legs. So then you can reverse, stop and reverse and continue trading in the direction.
So one thing James just mentioned that was really interesting is James just gave a lot of information about that one concept. But what's interesting is when you really understand a variable and you study something specific, what ends up happening is all of a sudden, I talk about it in some of the reviews at times. A bad stop order is a great limit order, and a great stop order trade is a terrible limit order trade. Everything in trading has an opposite. So if you understand one concept really well, you all of a sudden have a system for the exact opposite. So James mentioned stop and reverse. If you're taking a trade that you know is high probability and you know what the parameter is for that trade to fail, then what a lot of traders will do, you hear Al talk about it all the time. He'll say that this trade wasn't working, so I reversed my position and I made back up what I lost and a little bit more. A really good trader that understands what they're doing because they understand the back testing and the logic behind it can do that. And that's exactly what James just told you. And there's one thing, James, I think this is an appropriate slide I want to just put on this chart on this screen really quick. And that is, James, I believe you mentioned a while back, I believe you mentioned to Ali or you mentioned to myself, this system, you have a couple of systems you built. And some of those systems, you actually don't even need the algorithm or the indicator you've built to run the system. You automatically can think through it in your head just because of all the repetition you've had with that system. Is that correct? In other words, you've in essence become that system mentally.
Mm-hmm. Yeah, I mean, and I think that's more in that respect. Actually, I don't often trade like with the code on the screen that I wrote. Yeah, I'll leave like the opening gap code on, because that has a lot to do with assessing context at the open. But beyond that, I'm not usually looking at the systems at this point.
Because you just think through it in your head, like it's just kind of subconsciously there.
Yeah, and so because I did the I1R system, and then I did another big bar trading system, so Z bars, and then I wrote a trading range system. And so between those, it really covers. And the reason I did that is because I wanted to cover all the major phases or expressions of the market cycle. And so in order to basically cover the entire all of the possibilities for what might happen on a chart. Um, and I know that you actually took what I actually love to see, because I started uh, when I live in New York. When I moved to New York, I worked in recording studios, and I worked with a lot of electrical engineers, and so I love the flowcharts that you were producing
Mm,
for your binary systems.
sure.
Do you have one of those?
I've got, there's a few. I can pull one up here.
Just as an example for alternative ways of thinking about these, the organizing ideas, because I haven't seen one since you shared one of your kind of initial frameworks.
Sure, I'm gonna pull one up right here. But the reason James is asking about flowcharts is when you're trading, you've got to have. Let me just let me back up for a second. When you're trading, if you think about all, and I've talked about this sometimes in the trading room or some of the end of day videos, if you take one bar and think through, everyone says it. If they're not doing well with their trading, they get frustrated, so they just say, okay, I'm not going to trade. I'm just going to watch the market, and all of a sudden they can understand what's going on really well. But then when they take all their decisions they have to make to decide what the market's doing, and then they apply what they're having to, all the actual mechanical decisions. Do they buy? Do they sell? Is it a limit? Is it a stop? Where does your target go? Where does your stop go? They become overwhelmed with decisions. You can build flowcharts. If we think about, I know a lot of you watching have probably studied Al. And if you think about Al in the trading room, think about the entire video course. I'm just going to mentally think through a flowchart. The market is either, James, you can probably answer this. The market's either in a trend or a what?
Trading range.
Trading range. So there's two binary choices. If it's in a trading range, it's either tight or broad. If it's a tight trading range, what does everybody say not to do in a tight trading range?
Stop orders.
Yeah, just exactly. So stop orders force you to trade in the middle. So what we just walked through is a flow chart. Okay. If it's a trading range and it's tight, don't trade. If it's a broad trading range, look to buy in the bottom third, look to sell in the top third. If you've listened to Al, you've heard him say, the market's in a tight channel, I only want to buy. If it's a tight bull channel or it's tight bear channel, I only want to sell. If you can take the entire video course of Al's and think through it in a flow chart. Everything from the market cycle, you could actually write up a flow chart really quick. And the reason why, I'm going to go ahead and share this really quick to tie into this with flow charts, and that is this chart right here. Let me get it pulled up. So what you'll see here is, James, can you see this discretionary trading compared to a systematic trading?
Yeah, I got it.
One of the biggest challenges traders face is everybody wants to be a discretionary trader. Everybody wants to be Al. But the problem is these last two pieces. Traders experience and instantaneous rules. The amount of experience and the ability to basically, Al is one very large flow chart. And he can subconsciously narrow down decisions really quickly. What James has done is this side of the right. James took a concept like I1R. He got the market data. He designed system rules. He built filters. And now he has a signal. So in other words, James was able to build. I'll stop sharing that for a second. James was able to build a systematic way to trade that now he can trade in a discretionary way by seeing it on the chart. So if someone wants to become a discretionary trader, the fastest way is to think through it from a systematic standpoint. If you think about the video, what does Al say to everybody? Learn how to swing trade. What Al is basically explaining is learn the difference between a major and a minor reversal. That's in essence flowcharts. Think through the most simple flowchart. I bet I've got one right here. Let me just pull it up.
While you're saying that, the difference between the major and minor reversal, one of the things that I found when doing my I1R research was actually that two filters, and I wanted to get it down to two filters, had the most significant effect on the performance of it. And one was whether that first leg broke out from a previous leg in the opposite direction. So if it was a bull leg breaking out from a previous bear leg, which means no longer in a lower trading range, for example, or a strong breakout of the EMA. So one of those two. And without that, you could say, like you were saying, a minor reversal, you can have a strong bear trend, generate an I1R on a bounce that doesn't take out the previous bear swing and just reverses down to create a lower trading range, right?
Yep.
And so then you get stuck, I have to average in, and you can recover from those too, because if you accidentally execute on that, you end up in the market, then you can actually scale in at 70% of that first leg, and with the expectation of being able to get out at around 50% of the leg. So there are ways to manage it. And those are the things that you also get from, really doing a substantial study.
But the key with that is you focused on that one topic, I1Rs, and were able to discover everything around it, all the different environments, where bear trends, bull trends, and that gave you complete confidence in understanding what you're doing. And James, really quick, because and by the way, this is please ask questions here. James and I are going to start doing more of these frequently. So this will not just be a one-time deal. But we hadn't even talked about, James, let's talk about you for a second. The position sizing. Once you actually figure out a system really well and you understand the performance metrics, how does that impact the position sizing? Al always says a trader should never risk more than, 3% realistically, but he says most traders should never risk more than 1% of their total dollars on a trade. How do you say that varies with, if your I1R system? If you are anyways, the
Uh,
point was, go ahead, James.
yeah. I mean, the I don't come anywhere close to risking 1%. Yeah, if I scale in, my maximum risk will be 1%, and that's a reflection of what makes me feel good. Like I don't like to have on more risk than that, and so and this is something that Ali gets into at a number of different points in the course. And I think most people who've been trading for a while have a pretty good sense of the point at which they start not feeling great about their position, even if it is a good position, and then mismanage it. And so, for me, it's not a matter of mismanaging. It's just, I like to trade. I don't want to feel bad while I'm trading. And so for me, it's typically, I know that I1Rs have basically three places to enter, and certain conditions surrounding those. And if I need to scale in, I'll scale in usually at most 3 times. So usually I enter with 1/4%. I'll add 1/4, and then I'll add 1/2 so that I can, have, so that I can get out if I need to at, a 50% bounce, which is typically where you'll see a bounce if you do get a full retracement of the I1R leg. I'm not typically conscious of that any longer because I'm not really looking at the I1R on the chart any longer, but that's how I would manage it. And so it's a matter of, understanding that position sizing according to the expectations for the system. So knowing I generate between 3 and 8 trades a day with that system, and then between 4 and 5, from another system. So I'm somewhere between 7 and 14 trades a day. Do I need to risk 1% for every trade? No, like it's
So
not
you,
it's
you
not
just said
necessary.
something. I want to stop you real quick. You just said something very interesting. What James, if you guys just caught on, what James just basically explained is he's got a series of systems. He understands how the system should perform on a given day. Therefore, he understands in a given year what should the expected outcome results be. You heard James say, why do I don't need to risk 1% because if I'm risking this and I can take this number of trades, he is confident in his ability with that system to get to that year-end goal or that 5-year goal, 10-year goal. A lot of traders, what we end up doing naturally is we just think, oh, I'm just going to risk 1% on every trade, when really you can probably risk significantly less. And the other thing is, even though James is comfortable with what his position size is, he said 1/4% per entry, and then doubling on that second scaling. What he's not telling you is he's done the homework in understanding what is that true risk of ruin of that system. He knows that he is far below the actual ruin of the system. And by ruin, that means James can no longer trade because the account is blown up or all those terrible things that traders want to prevent.
Yeah, it's a different metric for each person, but
Mhm.
it's not losing the entire account. Yeah, it's not being able to trade.
No, it could be 10%.
Yeah, yeah, exactly.
It certainly could. Everybody thinks, that's a great point you just said, James. It's different for everybody, but everybody has to think realistically. We've heard plenty of people say, "Oh, I'll risk 5% per trade," but then when I get to $100,000 account, I'll suddenly start risking 0.5%. Life doesn't work that way,
Hmm.
and everybody has to understand if you have this amount of money, what your true risk is. What you can truly tolerate from a financial standpoint, and you've got to design a system and your trading vehicle around that risk.
Yeah, I mean, I forget where the chart is, but the probability of blowing an account, risking 5% per trade is like phenomenally high. I don't remember what the percentage, what the odds are, but it
It has
doesn't
to be a
it doesn't look
very
good.
it doesn't, and it's got to be beyond a high performance machine
Yeah,
to even get away with that. And if you could get away with it, why would you?
yeah, exactly.
That's
Um,
exactly it. So again, please, comment some questions. We're hoping to, James, what do you say? Maybe Thursday we'll have
yeah, I
another
think
one of these.
Thursday's great. Yeah.
And so everybody plan on Thursday evening. We'll have another one of these sessions, and we'll start going into more topics and just overall, really about system design and why overall, if you want to become a discretionary trader, why do you need to have systems? And what I would challenge everybody to think, if you study out, go back to some of the video course tomorrow and think through all the ways Al talks about, his brain is one large system. It's just a mental framework of a system. He is thinking through, something like this. I'll share this quick flow chart and then we can wrap this up. Many of you have seen this flow chart before, but here's an example of a trading the open system. It's not even a system. It's just a decision tree of trading the open. And this is actually from Al's video course, trading the open. And there's really three types of opens. You have a trend from the open, breakout mode, opening reversal. So pretty much you can build decision trees on everything. And then if you start to study the open, you quickly realize a trend from the open is not that frequent. So most people should focus on some form of this, some form of trading range type of open. So James, is there any
yeah.
other final quick comment you want to tell anybody?
I would just say uh, CXins asked the question about trading or
Read the question. I'll pop
yeah,
it up on
says
the
I'm very
screen.
new to systems trading. Was curious if you could program the logic Al talks about.
Absolutely, you can.
Yeah, and you cannot account for all of the nuances that Al accounts for internally. Like that's, I mean, in theory, maybe you could, but to code means that you have to necessarily restrict some things. You can leave some things open. I mean, for example, that's why I, chose to only use two filters for the I1R system I developed initially, just to not unnecessarily restrict the signals it generated. But yeah, I mean, you can code for, uh, you know, you know, spikes, type breakouts. You can code for small bar breakouts, which are basically breakouts on a higher time frame, large breakouts on a higher time frame, high ones, high twos, low ones, low twos. I mean, all of that you can code for. I have something that I put together and which I can talk about in the next video. Um, I built a trend trading range indicator to just give an example of how you can code for price action. And I built a kind of a rudimentary signal system based on it just to show that thinking about the market from the perspective of whether each bar is a trend or trading range bar, that
Mm-hmm.
you can generate meaningful trading signals based on that alone. And then applying, and so it's not an optimized system, but it's an interesting place to start and start thinking about how you might, uh, develop a system that would work for you. So
And I'll say one thing with that programming the logic, you can also do that from a mental standpoint. Everything Al talks about, if you break it into small bite sized chunks, you can learn it. What people mess up with is, if you can, I'm curious if you can program the logic Al talks about. That is a very challenging task, whether it's mental, mentally thinking from a systematic way, how to trade like Al. It's a very daunting task. But if you take something like James talked about, everybody can think through. I mean, I challenge everyone: go home tonight, spend time. How could you trade the first leg so a breakout to catch the second leg? Al has a ton of discussions and videos regarding that, and you could take that one piece and build systems out of that, even major trend reversals. So when you think through everything Al discusses, take something such as trading the open or a major trend reversal, and what are some key features you could add to incorporate a system into that? It doesn't have to be a perfect system. No system is going to be perfect in 5 minutes, but it's taking small chunks of it can build to bigger and bigger pieces of that system.
Agreed. Yeah, and actually, it might be useful to also, before Thursday, for anyone who wants to come with other questions, to read Ali's article that's on the BPA on the website, on becoming a professional trader. I mean,
I'm just
if
gonna,
there's
since we have it, sure. What I'll do, and by the way, if you want to learn more about the Systems Academy, I put the description in the about. What I will also do is, here's the Brooks Trading course. If I scroll down to guest traders, and James, please keep talking. I didn't mean to cut you off. I just want to show where the article is. Guest traders, becoming a professional price action trader.
I mean, this is for those who haven't read it. I mean, this is before Ali had Pro Trader mentoring, before SA2. I spent a lot of time with this and really organized a lot of my research, initial kind of research and exercises and market replay with NinjaTrader around the concept of intentional practice and how he discusses it as kind of one of the foundational steps in the circular process of learning as a trader to become a professional trader. So that there's so much value in that it might also be something useful for folks to think about before Thursday. And maybe we could start Thursday with the question here. Could you talk about student experience level desired beyond what Ali presented?
I'll take a picture of this right now, James. That's a great idea. So BH on Thursday, we'll cover this topic right here on the screen and go more in depth with that. That's a great idea, James.
Cool. Well, yeah, it was good catching up with you, Brad. And
of course, same to you. Looking forward to Thursday. And again, if you want to find out more information, you should be able to click on this. I put the link right here in one of the comments. If you want to read Ali's blog about becoming a professional price action trader, and if you want to learn more about Systems Academy, again, just go to the About section in this channel or in this particular video, and you can click on the links, excuse me, to learn more. But other than that, James, it's great talking to you.
Yeah. Well,
and everyone, again, we're hoping, James, what time are you thinking?
I mean, I'm good anytime after 8, 8:30ish.
8:30. So
sorry, 8:30 Eastern. Sorry, I should qualify that one.
What if we do, let's say 9 Eastern time, so 9 p.m. Eastern time, 8 p.m. Central time.
Great, let's do it.
And we'll go from there. And for those that are on the YouTube, pay attention to this channel. We'll post a link for the upcoming event here sometime tomorrow.
Excellent.
Thanks,
cool. We'll catch you all then.
Have a good one, and thanks for watching.
All right. See you later.
Take care, James.